Gold prices are trading back above 1,900 US dollars per ounce. Silver prices have broken out 3% this week. Palladium prices are broken out 2%. Platinum is up 1.5%, and we have copper up 2%. Everything that we talked you through on the week ahead commodity report and last week's reports as well, to look out for big buy opportunities last week on palladium. $1,200 per ounce or lower, on platinum at $900 per ounce or lower, on gold sub 1,900 US dollars per ounce, and silver, lovely buy opportunity around the 22.50 zone. Now we're taking the opportunity this week with our clients to bank now 1,000 points profit on palladium. Yes, you've had a 3-day impulse move to the upside on palladium, a slingshot move higher. This has allowed us to lock in 1,000 points. Now, alongside that, platinum prices, they surged to $930 per ounce on Tuesday. Gold prices breaking out to $1,904 per ounce. Copper prices, again, we've seen a nice breakout all the way up towards 1 week highs. And alongside that, we've also seen lead prices break out to 18-month highs. So this is the week where we have the BRICS Nations Summit, and alongside that, the Jackson Hole Symposium. As we've been discussing with you, this was the week we've been anticipating a breakout and a risk-on move with commodities here. So we've seen that back-to-back moves here across the metals over the course of the week so far. And of course, we're only still at the start of the week. We've still yet to hear from Jerome Powell, Christine Lagarde later on this week at the Jackson Hole Symposium. And of course, there's lots of speculation around the BRICS Summit that we are going to get some information regarding the prospect of a gold-backed currency, which the BRICS nations are supporting. So this is all at the moment providing a further catalyst to metal prices going higher over the course of this week. And all of this in the face of the dollar also breaking out to the highest level in over 2 months. We remain long the dollar. In fact, our dollar position is up now almost 400 points. That's a position that we still maintain from 99.67. So we've seen a fantastic move so far across multiple commodities this week. Now, as it relates specifically to gold, as we discussed with you previously, we perceive buy opportunities right now below 1,900 US dollars per ounce. Obviously, the lower, the better here to take advantage of the current dips. Now, at the weekend, we did witness that hedge funds and money managers in the last week, they've significantly trimmed their long position on gold. Not so much a trimming of the position as opposed to being liquidated as a result of many of them bag holding gold since May and June above $2,050 per ounce. Now, they've finally been liquidated with the selling pressure that we've seen over the last couple of weeks. And with that, this is where we're starting to see a bit of a rebound here with gold, finding support at the 1885 zone and now trading back again, back above 1,900 US dollars per ounce. This time of year is typical to get risk on sentiment for the precious metals and for them to do well right at the end of August before we then move into a different cycle when we move into September. All of this is playing out. If you just go back, watch our videos last week. We drummed it into you regarding palladium. Big buy opportunity down at the 1,200 zone. That position is up 1,000 points in just a week. Platinum last week. Any moves below $900 per ounce. Last week it traded all the way down to $885 per ounce. It's broken out over 450 points since then. And again, gold here, great buy opportunity in the last week, and silver prices as well have been leading the move here. Since we had a retest down to 22.50, we've now got silver prices, they're broken out to 23.60. So we're seeing some lovely opportunities so far over the course of this week. And again, this comes down to really understanding the capital flows that you get at this time of month. Obviously, the catalyst which could cause that risk on move over the course of this week and capital to flow into the metals here, as we've seen many hedge funds get rugged on the recent sell-off. Ultimately, this has provided a fantastic opportunity to buy the dip. So you obviously want to be utilizing and understanding the narratives, the fundamentals, the cycles at this time of the month. Definitely the capital flows here. As we head towards the end of August, then further align that with the sniper entries here. We want to be aware of the key areas of liquidity where many traders are going to get stopped out. These are often some of the best areas to sniper in and get your long position on. Again, palladium, great example of that, 1,000 point profit in just 1 week here. And then alongside that, utilize and understand data, statistics, market intelligence, the intermarket correlations in the market, the ratios, and then further align this and compound it with how the hedge funds, the money managers, the banks, the institutions, how they are positioned in the market in real time. This is all going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.